The jobs data just came back and it is worse than expected. 92,000 jobs lost and the labor sector really weakening across the board. So that's what we're going to go through today. We're going to walk you through step by step exactly what has happened in the market, looking at the reports and how this might affect your portfolio. So with that being said, let's dive into it. As you can see here, the US loses 92,000 jobs in widespread and unexpected downturn. And we'll go into this a little bit, but we've seen a lot more of a downtrend since 2022 in the employment report. There's a really good report here by ADP. This is what we're going to go through. In establishment sizes, so in smaller companies between 1 to 19 employees, we've seen a big jump in small business, which is good. And then in mediums, between 20 to 49 employees, up about 2,000 jobs, which is great. Mid-size and larger companies seeing that downtrend, but the big levels, so 500 plus companies, so typically doing over 100 million a year, which are only 0.1%, did see job increases. But again, there's such small amounts of companies that are at the 500 plus employee range. Most of the companies out there are small to medium. So it's good to see this growth in the smaller sector, but we will dive into a little bit of the... So with that being said, we will look at the chart here, and this is the chart of the labor market. So over the past few years, since January 2022 until February 2026, so this month, you can see there's been a major downtrend in the labor markets. Like this is pretty big. And this is why it's a little worrying for the stock market portfolios, because this is a significant implication in where companies are going. So as you can see, back in 2022, there was hundreds of thousands of jobs being created per month. I mean, look at it, and it's just been declining. And this is where we are today. So 92,000 jobs lost. So the US unemployment rate was also one of the things in the report. It was expected to be 4.3%. It came in a percentage higher there, so 4.4%. And as you can see, it's been just steadily increasing since that 2022. So it's the inversion of the chart. In 2022, we saw a lot of those jobs being created in the past slide and unemployment lowering. And it's been the complete opposite on this chart, right? So as there are more jobs lost, there's more unemployment. And by the way, all these statistics are online. I just like to compile them for you guys. So as of March 5th, the Challenger report states that February cuts plunge, year-to-date hiring falls 56%, and layoffs plunge 55% to 48,307 in February. So what does this mean? It means that layoffs did plunge, which is good. So there was announced that 48,000 job cuts in February, down 55%, but it's still in this place where we're still on a downtrend of losing jobs in the labor market. So it's a net negative in the market. If we were seeing job cuts lowering as well as massive job increases, then that's fantastic, but it's kind of the opposite. And so which industries are cutting in February? So technology announced a 11,039 job cuts in February for a total of 33,030 in 2026 so far. This has been an increase of 51% from 22,000 cuts in the sector announced in the same period last year. Education followed with a 5,400 job cut in February for a total of 6,200, a 96% increase from 3,160 job cuts announced through February of last year in 2025. Industrial manufacturing as well, which has a big thing to do with the tariffs. With the tariffs being called illegal, the whole goal with that was to bring back manufacturing jobs, was to put tariffs on other nations to increase the manufacturing power in the US. With those being deemed illegal, this actually makes it slightly worse because the industrial sector has just been getting slaughtered. So last month, companies that provide industrial materials and machinery cut 4,100 jobs for a total of 5,600 jobs in 2026 thus far. This is an increase of 2,300 cuts announced in the sector. Transportation as well has it. So healthcare companies and health product manufacturers, including hospitals, have announced 19,200 job cuts this year. So this is the highest January to February total since 2021, when there was 20,200 job cuts were recorded in the sector. And that's the thing is during that time, it was during COVID. So people were leaving. They didn't want to have exposure to the virus. It caused a lot of pain on those workers, but we're not seeing that. This is just a time of major uncertainty. So why are the companies cutting? So this is again a Challenger report here. So in February 2026, store unit, a department closing led all reasons for job cuts, with 10,700 announced during the month. Market and economic conditions followed with 10,100 cuts. Restructuring was cited at 9,100 jobs, while the cost cutting announced for 5,600 planned layoffs. So far in 2026, market and economic conditions led all reasons year to date with 38,500 cuts following the contract loss, with 31,400 restructuring, with 29,000 and closing with 23,000. So this is a lot of numbers. Basically, there's a lot of change being happening. And the next piece is because of artificial intelligence. Last year, I believe it was 5% job losses due to AI, which is still pretty high, but it's rapidly increasing. So it's at approximately 10% of total cuts just for this month. So in February 2026, it's been cited that 12,300 job cuts announced, or 8% job cut plans. So this isn't even getting into the bulk of it. And this is why I really believe over the next 2 years, it is crucial for you to learn a skill like trading in the market, options trading, to have that safety umbrella over your family. So then if you do lose your job, you're able to still have income coming in based on a skill that AI cannot replace. At least, yeah. Do I think there's already bots that do great with trading? Yes, but there's still a human element to it. And I think that's a really, really big piece in the market. So let's move on here to what is actually happening with manufacturers. So US manufacturers are still shedding thousands of jobs as workers ask White House for help. And obviously this was Trump's big push when he got elected, was to stop this globalization and bring back the manufacturing, to manufacture everything in the US as possible, cutting more ties with China and less reliance on them. With the recent Supreme Court decision, this has backfired pretty heavily because this was his whole plan. And unfortunately, when this job report came out, we didn't see anything from Trump on Truth Social to announce kind of like a morale boost. And usually after a job report, he'll say, yes, like I'm doing better than Biden and my administration's achieving more. And this time around, he was kind of like, well, at least the markets are doing good and you have more money in your retirement. But counteracting that with job losses and inflation, in my opinion, is just a net negative. And we're going into a dicey time, which those 401ks and IRAs could very well dip. And then that brings me to my next topic, which is oil and how this will affect potentially the job markets even more. So when prices go up of things, including like oil, obviously everyone knows by now that the war with Iran, the Strait of Hormuz, I believe there's only been 2 ships that have passed through so far, which is like nothing. And the price of oil, it's spiking. It's at $92 currently, up from $73. So big spike there as well. And we're going to go through gas prices here in a second, so stay tuned for that. But oil is plowing towards Wall Street's dire $100 per barrel scenario for markets and the economy. Now, you have to understand, when gasoline becomes more expensive, when the price per barrel of oil becomes more expensive, it gives more cost incurred to the businesses. And that means less profit, which means less hiring and product development. So it all goes together. This also means that the consumer will have to tighten their wallets, less traveling, especially going into the summertime, and more closely looked at budgets. So the national average gas prices for over the past little bit, and I think this was super interesting. So the current average is $3.32. Yesterday's average was $3.25. A month ago was $2.90. And the year ago average was $3.10. So you can see it's up from a year ago. And I just think this is the beginning of it, because the longer this situation goes on with the war between the US and Iran, it's projected to last 100 days. So just think of that issue of 35% less oil in the world. Gasoline prices are going to go much higher over the next 3 months. And I think this could dramatically affect people's accounts. So the next Fed rate cut meetings, obviously there's a few more rate cut meetings before the new Fed Chair, Jerome Powell, is unlikely to have a rate cut at the next meeting, which is March 18th, 2026. I think that's, a pretty realistic target. I don't think rate cuts are going to happen. At the meeting after that, so April 29th, 2026, there is a little bit more of a chance, about 20% or 19.5% chance that the rate cuts do happen, but I think it's still very unlikely. And then 79% chance that there is no rate cut. But then, as Trump's new federal chair comes in at the next meeting, so this will be in, I believe, June, there is basically a pretty solid chance here, 42%, that there's going to be a rate cut. Now, do I think this is possible? Absolutely. Do I also think it might be just blown off as, this is inflation, maybe we'll consider it, but it's going to keep bumping up the cost of everything, so we're just going to leave rates the same? I think there's basically a flip of the coin. I think this is a very smart strategic move that Trump is doing of of getting in his new federal chair, because I think he wants rate cuts to happen to allow more money in the economy for the people. But that being said, it is a total flip of the coin. This is a pretty big deal, though. If this does happen, I think the markets will rally pretty heavily and really, really appreciate that move. So what is my biggest fear in this situation? And what I ultimately think is the biggest risk is stagflation. So the definition of this is slow economic growth and it's high inflation. If price per barrel of oil keeps going up, especially over the next 3 months, there's no growth and there's a decline in the job market that we might see continue, that could lead to stagflation. Now, this is even worse than inflation and could really, really affect people's lives for many years. Like I said, weaker labor market, rising price of oil, and then sticky inflation that really doesn't go down. And those are my thoughts here on what is actually happening in the market. So with that being said, if you guys enjoyed this video, make sure to subscribe, leave a like button so you can stay tuned for my most recent videos. I'm recording quite a few good tutorials on the stock market currently and options trading. So if you'd like to see those, let me know down in the comments below. That being said, take care.